James Wu is a partner at Yellowbell Management and the general manager of global hash sales at B Computing. James previously held senior positions at Citigroup, UBS, and Goldman's. James, his firm, and his partners have leveraged their relationships with some of the biggest semiconductor names on the planet, TSMC, MediaTek, SPIL, and ASE, to produce some of the most advanced mining equipment on the market today. James's relationship with miners, investors, and semi-companies in both Taiwan and China offer a unique perspective into global mining trends, and a very rare glimpse into the black box that is Chinese mining. This is a great conversation that I hope you find as insightful as I did. The Bitcoin Investor is brought to you in part by Delta. Delta is a next-generation crypto futures and derivatives exchange. Delta offers futures contracts on dozens of different cryptocurrencies, more than any other exchange in the space. Go long or short at up to 100x leverage on virtually anything worth trading in crypto. Think BTC or ETH will move this week but aren't sure of the direction? Delta's new weekly move contracts allow you to trade volatility without taking a directional view. You can also use up to 10x leverage to enhance your returns. Use the referral link in the video description to save 10% on TradingCom for the next 6 months. 3, 2, 1. Jumping into it, why don't you give us a quick introduction of who Yellowbell is and how you personally got into the space?
Right, so Yellowbell is, I guess we're a boutique financial advisory firm. So we've been involved over the last 7 or 8 years on a number of M&A transactions, fundraising transactions. We've made direct investments ourselves, taking controlling stakes in various companies. Most recently, I would say our biggest project has been in the crypto space, and that led to the formation of B Computing, for which we have pretty sizable co-controlling stake in at the moment. And how we got into this space, it's pretty interesting. I mean, I think 3-4 years ago, this was something that we probably looked at, but at arm's length. I would say 2.5 years ago, some of our partners in China have made quite a bit of money investing in Bitcoin and a few, maybe just 1 or 2 other major cryptocurrencies. They came to us, they were frustrated, I think, with the experience they've had buying miners at a institutional and professional scale by the existing mining hardware suppliers. And they knew that, we had deep connections with the Taiwan supply chain. And if you think about a mining machine, it's really a beefed up, a simplified but very much beefed up desktop computer, if you will. And so the Taiwan tech sector set up very well for that. And already sort of TSMs, and I think at that point like Asus Tech, Microstar, these guys had already been involved in that space, sort of had a name for themselves. And they came to us and said, look, is this something that you could help us out? We give you guys some money. Can you start making mining machines for us to compete, with Bitmain? And that's kind of how we got started. So we were funded by mostly investments out of China, and a lot of that money came from kind of the crypto space, the crypto wealth that was generated then. And we took that capital, we linked it up with, MediaTek, ASE, TSMC, all of these major players. We went to them and said, hey, can you help us out? Can you help us sort of build a world-class mining machine? And much to our surprise at the time, and remember, this was 2.5 years ago, we hadn't really been in the space for that long, but we were surprised at how much they had already knew of this industry. And in fact, in some cases, had already dabbled in this space. They have solutions, they have prototypes, they have a real, in some cases, full business plan for the cryptocurrency space. So it was actually a very quick conversation in terms of joining forces and looking to see if we could do something. Eventually, we had funding from some of these guys directly into our company as well. And this was when I think on the sort of left slope down from 20,000. We initiated conversations when Bitcoin was probably around 11, 12,000. And by the time we started, inking deals and talking about investments, Bitcoin had dropped to like 6 or 7,000. But they were still in it, and they were still happy to work with us. I think probably even more so than us at the time, they took a more longer term view. And from there, we got the funding, we got the designs, and we started making, mining machines. I think our first one taped out Q2 of last year. After about 6 to 9 months of design and back and forth, tape outs, what have you. And so, yeah, it's been a wild ride, but at the same time, we're really grateful to have the kind of partnerships that we have in Taiwan.
Yeah, I think some of those big semiconductor companies, like they got a real taste of the potential for mining kind of in, the end of 2017 and then first quarter 18, because first quarter 18 is when Bitmain had their big quarter, when they had like a $2 billion quarter. And that's when, I think it was first quarter 18 when TSMC was guiding, like 5% or 5 to 10% of their full year revenues could come from mining. Yeah. And that's, I think they were saying 5% publicly, but analysts were saying that they were kind of saying 10 as well. And 10% of TSMC full year revenues is a large number. And GUC at the time, which is an IC design house, they told me that they were doing like 30% of their revenues at that time were coming from mining. So I think at that time they really saw the potential, and I think they're pretty vocal about their disappointment in Bitmain and what happened with that relationship. So I'm sure they're keen to work with other players.
Yeah. I think, our internal numbers showed Bitmain was closer to 10% at one point in 2018.
Just Bitmain?
Just Bitmain by themselves in terms of their order forecast. Yeah, they very well could have been had they followed through and taken delivery. Of course, that wasn't what ended up happening. And they burned a lot of bridges, in that 6 to 9 month period when Bitcoin prices really started to drop.
Yeah, and those are key bridges too. Like, where do you go for 7 nanometer if you don't go to TSMC?
Even now, you don't have a lot of choices, right? Samsung is out there allegedly having a 7 nano solution, but it's really not ready. They have an 8 nano that's comparable to TSM's 10, but that's not really going to get you to a very competitive space. So TSM is still the only game in town. And, if obviously TSM is now asking for cash up front to take these wafer orders. But, even if you were to pay up front, because of the bad taste that's been left in everyone's mouths, it's not a guarantee that you'll get that allocation, right? Because just because you pay for 100% of this order doesn't mean you'll come back with an order next quarter. And whatever capacity they allocate to you this quarter is something that they're going to have to retune, take offline, and recalibrate for a Qualcomm or Apple or whatever for next quarter. So there's still real costs for a foundry and for an ASE. All the other sort of process partners and the component suppliers. There's still real concerns that's lingered, from 2 years ago.
And I think even with the economic slowdown, is there any chance that more 7 nanometer capacity will come out in, say, third quarter, or is that a dream?
I think, right now, today, we've gone from an extreme sort of double booking situation for 7 nano to now probably a full booking. So it's still very tight. Even now with the slowdown, you have, the other thing you have to keep in mind is Qualcomm, had left TSM to try to do 7 nano with Samsung, and that didn't work out, right? So they're shifting all of their orders back. You have 5G that's on the takeoff ramp, ready to go. So even on the consumer side, maybe Apple is not as aggressive, with 7. In fact, Apple, I think, is moving on to 5 as we speak. The 7 nano is still tight. It's not,
Yeah,
you know.
a lot of the crazies in crypto, some of the crazies in crypto are still very worried about 5G. Apparently, it's linked to the COVID-19 crisis. Be very wary.
Maybe.
One of the first questions I wanted to ask you was about hash rate, right? Like, I think if you asked, someone on the street, if they didn't know what hash rate was, right, and they had seen Bitcoin price, fall to as low as 20% of the all-time high, you would think that hash rate would kind of do the same, right? But hash rate has just plowed higher, and I think that's kind of surprised a lot of people in the industry. It's just continued to grind higher, and at another all-time high, I think, right now as well. So what's your explanation for that? Why is hash rate continuing to go up?
Yeah, so I mean, that's sort of the $60,000 question that everyone's trying to get an answer for. And you're looking around the industry, you get pieces of information here and there, but it's hard to have. I mean, there's no kind of one third-party research that can pull everything together and give you a simple answer. I think based on the work that we've done, and then that's really all I can speak to. The growth, in hash rate is really predicated on 2 things, right? One is Moore's law, right? The continued improvements in mining power per kilowatt hour of energy that's consumed. That's, in just going back to the period that we were looking at, right? 2017, 2018, you're looking at 2.5 years. Computing power has gone up probably 8x in that time, right? If you just take the normal S9 back in 2017, 2018 to, I guess in a couple of weeks, Bitmain's S19.
17, 19, yeah.
Yeah, I think their S19 Pro, you're looking at 8 to 9x in terms of hashing power, right? So that's one. So even if you have, a lot of retirement of old legacy miners, the new ones that's coming on, every one miner that you plug in is going to replace 4 S9s, right? So that's one. That by itself wouldn't really answer the question of why people are still willing to be plugging it in, because plugging in has costs, right? You immediately start to incur operating electricity. You those things to take into consideration. And I think to get an answer for that, you have to look at how these players have been structuring their businesses. It's very aggressive how they try to grow, right? They usually have these, a What's Miner, who by the way had overtaken Bitmain, I think last year. It's the #1 vendor of mining hardware. Now these guys, they still take in maybe 30 to 50% prepayment when you buy a miner from them. They take that money and they immediately put it into the wafer process, which takes anywhere from 3 to 6 months before you can actually get a mining machine out. And then usually the buyers, certainly the institutional buyers, maybe they'll pay the balance of 70% after taking delivery. But if you have coin prices that are dropping, a lot of times the bigger buyers will just default, right? And they just won't take delivery of the miners. So they're happy to forego that initial 30% that they put down, and they'll go out and they'll buy. But 6 months later, maybe the coin prices have gone from, as you get any period, maybe it's gone from 10,000 down to 5,000. Well, miners would have dropped probably by 1.5 to 2x, that amount. So a lot of guys they'll just take the 30% off their books, that's sunk cost, and they'll turn around and they'll just buy, in the cash market, if you will, a miner that's for probably a third of what the original price was. So they still come out ahead. Mine, What's Miner, I mean, they have no, because for them, if they don't sell it in the current, cash market, it's just going to be sitting on their books as inventory, right? So they're sort of bound by the market, free market fluctuations of the mining price. They have to sell it. So once you buy at these lower price points, you economically speaking, you're still going to plug it in, especially if you scale. You have access to stable and relatively cheap electricity. Even though prices have gone, from maybe it's halved, or dropped 60, 70%, your new acquisition cost is still going to be relatively low. So you're still going to be plugging it in, and you're still going to be mining. So I think that's one angle. If you look most recently, maybe about a month and a half ago, a lot of the Bitcoin forks, they had already had, right? Yeah. So a lot of that capacity was probably switched to mine Bitcoin, because it was, the rewards are still better here. So I think that probably explains the most recent from that little hiccup from the start of the COVID-19 kind of breakout into now. I think that's probably what accounts for. I mean, it'll be interesting to see, right? I mean, in 2 or 3 days, when Bitcoin halves, how global hash rates will be affected. But we know for a fact a lot of Bitcoin Cash, those capacities have been switched to mine Bitcoin.
I have a quick question. If you spoke to some miners about maybe 6-9 months ago, the key to making money seemed to be the energy contract. Like, of course, the technology is one side of the equation. How efficient your ASICs are, on what whether you're 7 nanometer, 10 nanometer, 16, etc. But the other side of it is just how cheap your power is. Now, given we're going into what's looking like a global recession, if not worse, depression, one would assume there's going to be a lot of free energy. What I mean is, consumption of energy is going to fall through the floor, and there's a chance that people who are stuck on 3 cents per megawatt energy contracts could have got it at 1 cent in 3 months' time. So is that going to mean that you've got, if you're running your 7 nanometers on, say, 3-4 megawatt contracts, but someone who's on older technology can now get energy for near free, does that mean that there's going to be more hash power than there would have been had this not happened? Do you see what I'm saying?
Well, I mean, there's a direct, almost linear relationship, right, between your energy cost and how much you mine. It is true that we have seen energy prices come down quite a bit, pretty dramatically, and compounding that, the start of the rain season is going to start in another, I guess, 2 weeks or so. And if we were to compare sort of this time last year to now, I would say, electricity costs are probably down 20 to 30%. During rain season lows, right? So,
I think previously, miners had told me that they think that hash rate could come off as much as 65% post the halving. Point about the COVID energy glut, and then the rainy season in Sichuan specifically, like one of these big Chinese mining hubs. I wonder if that just cuts power prices so low that we could see hash rate be a lot more resilient than people expect, for a couple of months anyway, until COVID is resolved or, improves a little bit, or until the rainy season ends in China in October. So you could see, people think hash rate comes off 65. Is it possible that it only comes off 20 or 30, and a lot of these, miners get access to cheap power and can continue for longer than people expect?
Yeah, definitely. And I think for us, that is our internal working assumption, is that, originally we were expecting post-halving, global hash to come down 65 to potentially even 80%. Like 6-9 months ago, we think 80% of the global hash was being done by legacy sort of old miners, right? And we think the bulk of those will not be competitive.
What happens to those miners, those like S9s, for example, right? That can no longer go back and mine BSV or BCH because they've already had their halvings. Are they do they get binned, or what happens with that hardware?
Well, that the hardware can be switched to mine Bitcoin pretty easily. So that's one.
But I mean, it can't mine Bitcoin after the halving, right? Because it'll be very unprofitable. Like for an S9,
yeah.
Like if you've got like whatever the number is, I think like probably about at least 50% of the network people think is S9s, right? Still. So what happens to those machines? Do they just have to be trashed, or can they be used for anything?
Right. So, I mean, this kind of goes back to what we were talking about before, right? So, we think we're probably looking at 40% of the global hash right now still being done by S9s. Maybe half of that can be upgraded with some firmware, and you probably get efficiency up another 15-20%. If you take that, if you go to places like Venezuela, Qatar, Iran, which we hear a lot of Chinese miners are going to.
Is that right?
Actually, maybe they're not going themselves. They're selling these machines to miners in those areas where you can basically get electricity for free. Then they will continue to mine, even with some minor sort of upgrades on firmware. They can continue to mine post halving. The ones that can't be sold or won't be sold, and they will just be shelved. And I guess people will wait. If Bitcoin prices hits new all-time highs, then they'll be dusted off and plugged back in.
I mean, if you're a state power company that can't sell its electricity, I mean, is this the catalyst? Is this next 12, 18 months the catalyst for governments that own their own power utilities to start mining? I mean, we've always heard that that's a potential, and I'm sure it's happening in some small degree, at test facilities somewhere. But that's another thing. That's another thing that could keep the hash rate much higher than you would expect, because these people are not that sort of price sensitive in terms of they can actually run at a loss because they don't care. The governments, they print their own money. And they're getting their energy for free. I don't know. It could be something where we start to see governments involved. Maybe
there was that news this week from the Ukraine where they said exactly that. They're like, we have a liability. We've got a lot of excess electricity, and cryptocurrency mining is a way to monetize that. That glut of electricity.
Oh, for sure. Ukraine. We know. The Saudis are looking to do this because they know, I mean, this most recent plunge in oil prices notwithstanding, and they know that oil.
They need something.
Yeah, I mean, they need something new, basically, right? And they have a lot of excess energy just kind of getting burnt for nothing. So they've come to various kind of large crypto players to see if they wanted to set up shop there as a way to monetize existing sort of resources that they've already deployed, and it's just kind of burning off for free. Even developed markets, I can share with you guys that in Australia, they have local governments are looking at ways to monetize energies that are very close to the major hubs within the grid. But these guys wouldn't call it mining. It'd be couched under a broader sort of science park or a major data center complex. But for all intents and purposes, it's a large sort of mining facility. And
when you think about it, Bitcoin mining it's like a battery, right? So when Macquarie Capital in Taiwan, they were setting up the wind farm investment, I suggested Bitcoin mining as an alternative to batteries, right? At least some percentage of the facility, because rather than storing it as energy, you can store that energy that's produced as cash, right? So it's kind of the same idea, really, as having a battery.
Yeah, well, I mean, mining is essentially a way to, very seamlessly transfer electricity into cash or power into cash, or if
Yeah, I mean,
you're in the Middle East, oil into cash.
well, wasn't the estimate that I thought the estimate from that Macquarie thing was that strapping on, some Bitcoin mining into a smart grid system could increase the IRR by about 10%. So, a 10% increase in efficiency of a wind farm project by incorporating some Bitcoin mining hardware and some storage.
Yeah.
I mean, that's 10% a meaningful difference. I don't know if that was the
Oh,
right
yeah.
number, but it's the number I had in my head.
No, I mean, I can't remember if it was 10 or 15, but it's somewhere in that neighborhood. But the point is, yeah, I mean, this is a way for these large energy projects to get more attractive, have their returns, right, and to make it more lucrative. And yeah, I think governments all around are looking at that, especially now with demand from kind of classical industrial, side is slowing.
Well, and also the yield aspect of it, because the mining business is a yield business, really, right? It's just like a utility. It's like the Macquarie Infrastructure Fund. It's just except in new technology. So I think as some of the stink comes off of this industry, like we saw Paul Tudor Jones this week commenting, saying that he's investing. So I think that really takes out some of the reputational risk. And I wouldn't be surprised to see some of the world's biggest infrastructure funds who are, wanting to generate yield, they start looking at this industry. And maybe some already are, because the unknown portion of the hash rate distribution is 54%, right? That's a big chunk of hash rate. We don't know who is doing it. So I wonder if there are, some quasi-institutional players that are already doing that, family offices and things like that are a little bit more nimble.
Oh, I wouldn't be surprised at all. And in fact, a lot of these so-called data centers, I would be shocked if there was no sort of mining component to it. Family offices, you kind of brought up an interesting point. The demand for these ultra wealthy families for these virgin Bitcoins is actually very high. Now, to them, that's real sort of store value. Regardless of the fluctuations of the price, they can get their hands on a pure sort of newly minted Bitcoin with no sort of shady transactions being, blockchain behind it. To them, that's worth 15 to 25% premium, over the prevailing Bitcoin price.
Everyone likes a virgin. I mean, virgin Bitcoin. Yeah.
Touche. Yeah. Yeah. I mean, maybe that was a poor choice of words on my part.
No, it was poor interpretation by. Moving forward.
Bad mind.
But you guys know what I'm getting at. I mean, these newly minted.
Yeah. No, agreed.
These Bitcoins for them is
in case these things ever get filled. I mean, that's always a risk, right? That in the future that these coins that pass through Iran get somehow sort of siphoned off, and you can't sell them for fiat.
All the ones that's been sloshing around in China, those are not the ones that an ultra high net worth individual or family would want to have in their coffers, right? They want something that's clean, doesn't have any weird transactions.
And I think there's so many global events that have happened this year that have really kind of highlighted Bitcoin's use in that kind of scenario. Like you look at the ultra high net worth in Hong Kong that have, whatever the number is, some huge percentage of their wealth in real estate. And now they're basically being absorbed by China. And it's like, I thought that was a really conservative investment to put all my wealth into real estate. And it turns out maybe it's not that great of an investment. You can lose whatever skyscraper you own to the government at any time, but those virgin Bitcoins, I mean, those are a lot more easier to move around, and although there's volatility, it could be a small price to pay in the long run.
Yeah, for sure. I think we've seen firsthand of conversations, discussions taking place along those lines, and in this age of unlimited QE. I think real estate, maybe gold, those are your first sort of go-to asset classes. But beyond that, and especially if you're in Hong Kong, real estate may not be the primary option going forward. So you need something else to hedge against inflation, right? And people far smarter than me, far wealthier than me, like the individual you just mentioned before, right? They see the writing on the wall, and they're taking steps to guard their wealth, and that's really the thing, right? These super high net worth guys, they're not looking for home runs. They're looking to protect what they have and get a little bit of yield, on top of it. Something that gives them a buffer against inflation. They're happy with that. And if you take a longer term view on Bitcoin, and specifically mining in the crypto space, I think if you're willing to ride out the volatility, if you have access to stable electricity, it will give you that, right? It'll never be something you put 30, 40, half of your wealth into, but we're talking going from 1% to 2% to now maybe 5%, 6%.
And I think maybe some people sorry to interrupt. I think some people in the West maybe don't understand the appeal of that, specifically within China. Like if you're a Chinese investor with a lot of wealth, it might be difficult for you just to buy a large chunk of Bitcoin, but you can invest in a miner, and invest in that hardware, and it generates Bitcoin, and then you can move that wealth wherever you want. So, I think that's one, easy selling point to specifically Chinese high net worth.
Right, and that's why such a large part of the mining, the global hash rate is housed in China. Now, I think that's sort of dynamic, and in some capacity have been taken offline. Some have been moved, elsewhere. But I would say this is just our sort of 2 cents, but the attitude of the Chinese government is less, I wouldn't call it friendly, but it's less hostile towards cryptocurrency and mining now, right? Because they got other things on their hands to deal with. Not the least of which is the sudden drop in industrial demand for power, right? And so it's sort of, in a very terrible situation. It's been not so bad, for mining.
Yeah, I think governments globally are just going to be really reluctant to crack down on anything that could be economically accretive, right? Like the news this week that China was going to stop publishing GDP forecast or GDP targets, right? Just going to go descriptive, kind of like a Western Canadian high school, right? Where it's like emerging, developing. You don't want to get A plus or a D. Right?
No more grades.
That's no more grades, right? We're just going to make it nice, soft, and fluffy.
Everyone is a winner. Everyone is a star.
I don't think governments anywhere are going to be really, there's an opportunity anyway that they'll be more supportive going forward to things that can contribute jobs.
And the sort of the hunger for growth to try and grow your way out of this. The only way to get growth is quite honestly to put money into new industries and to place bets on long generational type, let's go to Mars, that's, I don't know, flying cars, who knows what it is. But part of that is digital currency or the digital sort of realm, isn't it? So in a world that it's starved for growth and laden with debt, I think, like you say, no one's going to try and stifle anything that's going to give them a chance to grow out of this because they're desperate.
Yeah, and I think because we're on the onset of 5G and everything moving towards the cloud, depending on your sort of PR strategy if you're a government, you can say I'm just flat out mining, getting full on into crypto, or you can just sort of enjoy the benefits and the yield of that, but couch it under a broader sort of data center, cloud computing science park, right? And maybe you have legitimate sort of 5G cloud applications within it, but you're going to have, those things won't make you money immediately, whereas mining will. It will eat up a lot of excess capacity for your grid, and it will make you money almost immediately, right? And so that's something that a lot of governments are looking at.
But that's exactly what all the Chinese miners tried to do when they were trying to IPO in 2018, is they all of a sudden, all of them became AI companies, right?
Oh, yeah.
So they're like, we're actually an AI company, but we get like 99.9% of our revenues from Bitcoin mining and producing hardware. we're an AI company, so don't worry.
Yeah, and that's, I think that's maybe it's the unintended beauty of cryptocurrency mining, is that because it is essentially done, on the cloud. Because if you look at the semiconductor architecture, it does, you can very easily spin it into an AI, to having an AI angle, right? Because you have, it's like all AI is just having multiple cores that can compute really fast, right? And you have software that links it all together. And that's what mining is. It's just that mining does one set of computation, right? It does it extremely fast, hopefully very efficiently. AI has, more complicated algorithms, but they all have different cores. So the hardware, if you just take a look inside, is not going to be that different. And so you do have a lot of, a lot of the higher profile departures of Bitmain in the last 2 years. They're getting into AI, and that's real AI, right? It's not some weird, funky cryptocurrency mining AI. It's like real AI, because they've actually, they've accumulated a lot of knowledge over the last 7-8 years, building these mining machines on the hardware side and on the semiconductor side, so that they can make a legitimate push into real AI, right? And I think that's something that we don't talk about as much in the mining industry, because everyone's, so focused on survival. But if you look longer term, AI is a real possibility, whether we're talking narrowly in the, having a computer decide in a millisecond which cryptocurrency to mine, is AI, or real AI, that can have some real world applications and benefits, right? And so I guess my point is, cryptocurrency mining can be just flat out in your face, like mining, or it could be couched under a lot of newer, sexier, more kind of acceptable industries. Right?
Cambridge University this week had said that
Your microphone's gone funny.
Yes.
Am I back?
Yep,
You're back. Yeah.
Okay, so there was a report from Cambridge University this week that said that they estimated 65% of global hash rate comes from China. Now, their methodology was kind of sketchy, I think, because they basically looked at 3 giant Chinese mining pools. That was their sample. So I think they had a sampling error. And they basically said within these 3 big Chinese mining pools, most of the mining is done in China, which shouldn't be a shock. But I just don't think it's representative of the broader industry. So what do you think that's an accurate number? Do you think 66% of mining is still happening in China, or do you think it's a bigger or a smaller number?
I would place, that range to be kind of 65 to 80%. I think this time last year, everybody that would talk to us, we would be kind of putting out the 80% number. I think, with the crackdown prior, to COVID, a lot of mining capacity has moved away, to places that we talked about earlier, the Middle East, some of these South American areas where electricity really is free. So that's been steadily growing, and especially because we have, a big class of legacy miners that would otherwise be obsolete. So they've definitely picked up the slack. So that 80% is probably not there anymore, but it's still up there. I wouldn't be surprised that it's, somewhere between 65 to 80.
Okay. Yeah, I kind of felt that. I feel like 65 is high because I know that there's a lot of mining going on in North America, and I know there's a lot going on in places like Kazakhstan and Russia. Like there's a lot going on in Western countries, and I think there's a lot more that nobody knows about in South America, and also like we're seeing stuff coming out of Iran and stuff like that. So, but the question, I guess the mining in Iran could possibly be, Chinese dominated, but I think the stuff in North America and Northern Europe and it's probably predominantly Western. So I would have guessed that it's probably, I would have thought it'd be lower than 2/3 now. But I mean, what do I know?
It's tough, right? Because we don't have an exact number ourselves, but I think anecdotally, the sort of mining customers that we speak to, say in China, and you're right. There, I mean, maybe 70-80% of their operation is in China, but then they'll have 20-30% elsewhere around the world. But for these, if we group these guys into a class of Chinese miners, their scale and their order size are probably 10x that of any real kind of truly Western miners that we've spoken to, because the scale difference is just massive, right? And I think that discrepancy will only get bigger because these smaller, these are full on sort of real, 2-3 megawatt mining facilities in North America. They're not small, but they're gonna get pushed out, because anytime you talk to a miner in China, it's 10, it's 15, it's 20 megawatts a pop.
So if we're talking about the hash rate dropping, whatever, 40%, maybe 30-40%, very conservatively, maybe more, potentially. What and those are old S9s that we're talking about dropping out of the picture, right? So who's mining with those S9s? Like, these are Chinese farms, or these are individuals?
I think a lot of it would be individuals. A lot of the North American miners, I think they're sort of holding on with legacy S9s, but it's that number is dropping every day. Like I said, 10 months ago, we believe 70-80% of global hash was done by S9s. I think that number is probably cut in half by now.
So as they take delivery of their new ASICs, they're just flipping one out and replacing it with the other one.
Because the newer miners are so much more efficient, right? So it wouldn't make sense for you to use your power on old S9s if you have these newer machines available. Right?
No. And Jesse, what's going to happen with the price when? Let's say the hash rate does fall over the next. Let's say the prices stay stable for a month. Let's just say it goes sideways, and then the hash rate during that period starts to fall 30-40%. Is there any impact on price, do you think, for that?
So I was kind of thinking that a lot of them. So the people using the older equipment now, I think this is my guess. I think that they're kind of short-term incentivized. They're guys that are mining and then selling Bitcoin probably as quick as they can. And then I think there's another group of miners that have a better balance sheet and that are bigger and that sell more strategically. So my kind of guess was that after the hash rate, when you get the short-term kind of highly leveraged guys, I think we lost a lot of those guys in the drop to 3,800. I'm not sure. I've heard a lot of miners were very highly leveraged going into that in China, smaller guys. That when we lose those guys, the propensity sell will shrink somewhat. So while also the block reward is being reduced to 6.25 Bitcoin, like within that smaller block reward, there's a smaller chunk of people that'll just be selling a lot of Bitcoin every block that they mine. So I don't know, like James, what do you think on that?
I'm interested to hear what James says on this, because I do think that move down to 3,800 washed a lot of people out. Like, there was a lot of people positioned. We saw it in the future market, right? Where the outstanding interest in futures at BitMEX was well over $1 billion and rising, and got just decimated over a period of 24 hours. And the same thing, I think, was happening you'd think in the real world. A lot of people were playing the halving trade 3 months ahead of the game, and you can just sense a lot of salty people on Twitter right now who, as the price has gone up, they're getting more and more angry. There's some Bitcoin OGs recently who are just going on the most weird rants. And the only reason I could think for these people to be ranting the way they are as price goes up is because they got washed out. And they feel like they've been almost gamed. But anyway, it must have impacted the mining industry. And there must have been people, like you said, Jesse, who were massively into that trade. Well, and if that's now being cleared, then surely the risk of a downward price move on this halving is much reduced than it was before.
Yeah, I was just going to add one more thing. There was, Dovey Wan, she had a comment, I don't know what it was, like 3 or 4 months ago. And at the time, I didn't understand what she was saying, but she was saying that miners were lending their Bitcoin. I think what she was saying was they were lending their Bitcoin and they were getting USDT and they were using that to do CapEx, right? So basically, they were just getting super geared up. And I thought, well, that doesn't sound sustainable. Why would they do that? Right. And I guess it was because they were so bulled up on the halving and that there would be a big price rally into it like there was in 2016. And like we really haven't seen this time around. And then all of those guys, then the price dropped to 3,800 and all of those guys got crushed. So, yeah, I don't know, James, is that kind of what you heard happening in the Chinese mining market?
Yeah. No, I mean, I think, again, based on anecdotal evidence, miners generally, they don't want to sell unless they have to cover costs. And I think there was a huge chunk of Bitcoins that became available for sale because a lot of miners had to cover.
Yeah.
And with the halving, I think the industry should be cleaner now, and that sort of overhang, if you will, is cleared out. So I don't see any reason for there to be another massive wave of selling, unless the only scenario I could envision is a situation like we had a month ago, where everything was being put up for sale, right? You had margin calls on everything, so treasuries were being hit, gold was being hit, of course Bitcoin would be as well in that scenario. But short of something like that happening, and I don't think anybody's forecasting sort of those sort of 5 or 6 days of hell to repeat itself.
I don't think you can forecast those kind of events.
or anyone's expecting that to happen again. I mean, there's no reason for Bitcoin to go down.
So I've had a pretty big investor at a big hedge fund. He's asked me this question a couple of times. If hash rate drops by whatever your number, so it drops significantly after the halving, does that make Bitcoin less secure, the network less secure? What do you say to that? I mean, because you've got all this hash rate protecting the network, and then it's halved. Is it less secure? I guess my answer would be that the hash rate now is 10 times higher than what it was in 2017 when we were at 20 grand. So
we weren't worried about the security of the network when it was at 20 grand.
Yeah.
I mean, we were worried about the latency of transactions and the hash pool, the what's it called, the mempool. The mempool.
Yeah.
But we weren't worried about security so much. So I kind of feel the theoretical answer to that is yes, it is less secure, but it's still more than enough secure, even if it drops 50-60%. But I don't know what the number is.
I don't really think that's a real concern.
Yeah. Okay.
You have to drop like 95 to 99% really for people to wonder about that.
Yeah, we're up 10 times from the 2017 level in terms of hash rate.
Yeah. So I think the security component is fine.
Yeah.
I don't think that's something that people should be worried about.
So going back to the 7 nanometer, how important is 7 nanometer going forward? Like, do you have to have 7 nanometer? I guess if you've got cheap enough electricity, you can get away with less advanced technology. But how will everybody be going 7 nanometer going forward?
Yeah.
And how long will it take
for everyone to move to
7 nanometer, for 7 to dominate or to be more than 50% of the network?
Oh, I think it's already happening. I think 7 is. I mean, everything that Bitmain's been putting out since their S17s, their S17Ts, I think, were all based on 7. Now, within 7, there's a learning curve, and so not all 7 nanometer ASICs are created equal. Obviously, these newer ones that are coming out, they're going to be better. They're going to be more efficient. But yeah, I mean, I think it would be difficult to sell a miner and tell people that it's based off of whatever 12, 13, for all the legacy geometries. Yeah, I mean, nobody's really getting. Now, I would say this though, there are newer technologies out there that may they may alleviate the need for super advanced geometries, but none are really mature enough. I'm sorry.
Can you give us any
your microphone, Dan.
1 minute down. Mine.
Can you give? I think what Dan's asking for is what are those technologies? Can you give like a top-down kind of idea of what those are?
Yeah, there are new sort of packaging, back-end packaging technologies that can limit the physical space between your ASIC and your memory chips, right? That theoretically could lower both the heat dissipation needs, then also the speed and efficiency of how the solution itself would be run.
What about the immersion technology, that liquid immersion? Is that any benefit or not?
Theoretically, yes, but that's been talked about for years. I've yet to really.
No, I just wondered whether you'd heard anything about that sort of getting any sort of becoming more critical, at a turning point at all or not.
And I don't see it being a big enough impact to say, well, yeah, I can use 16 nanometer, but liquid immersion, I'd be competitive with the top of the line kind of S19. No, I don't think it's with that scale.
And what about 5 nanometer? So does TSMC? Obviously, TSMC is now already testing 5 nanometer. Do they have enough clients using 5 nanometer at the moment, or could this industry be sort of pioneering some of those orders?
I don't see it. I think these sort of upfront costs are just too high.
Right.
If Bitcoin prices goes to 30,000, then maybe. But right now, there's really no reason, to because every time TSM moves down a geometry, they only select a handful of partners, right, to build that library together.
Yeah.
Right. So it'd be the usual suspects, right? NVIDIA, Qualcomm, Apple, MediaTek, these guys. If you're not part of that initial consortium of designers, getting into, say, a 5 nanometer would be extremely costly, right? Because then you're relying on the IPs that's been built up already. You have to use their stuff, so royalties and also the yields initially are just going to be so low that you're just not going to be able to. You're just not going to be able to stomach that kind of loss. I mean, Bitmain lost. I think I'm not their spokesperson, but if you ask around, I think that number is anywhere from 300 million to 500 million. Just money burnt going from like 10 to 7, right?
Oh, because they mismanaged the inventory and
they were prepared. They weren't prepared because any new geometry that TSM puts out, I mean, the process itself is not stable, right? So TSM can't guarantee you a certain yield either, right? And then you couple that with the fact that for crypto, you're really going below the threshold voltage that TSM is really designing 99% of their processes at, right? Because you need lower voltage to have efficiency, but at lower voltage, you can't really push through those gates, efficiently. You're talking hundreds of millions of gates, that gets built into these cores. It really pushes at the envelope of physics. So at 7 nanometer, TSM itself really wasn't ready to fully mass produce for the Bitmain. And I would imagine for 7, it'd be the same thing. So no one's in a hurry, to be the first one.
So that's my next question. Like, kind of, you alluded like not all 7 nanometer are created equal, and you talked about the money that Bitmain burnt trying to get to 7 nanometer, and obviously GMO is the same thing, right? GMO Internet tried to go into 7 nanometer and blew
it killed them. Yeah.
What's your sense, given your relationship with guys like TSMC, MediaTek, and the testing packaging giants here in Taiwan? How much of it, like, do you feel like this is still amateur hour? Like, I'm sure MediaTek looks at the chip design being done at Bitmain, and it's probably like they must feel like it's amateur hour, right? Like, there's a lot of improvements that can be made, and they can be a lot more efficient in bringing these products to market.
Well, I mean, honestly, I think now, I think the S9s were definitely sort of amateurish. The S17s, I think they've made pretty big strides on that. The latest disclosed specs for the S19s are pretty impressive, right? So I think part of the benefit of having made that horde of money that Bitmain did is they really spent their way to being a real design powerhouse, at least within the crypto space. So, and they paid the price for it. I mean, they burned through like literally hundreds of millions of dollars, but what they bought back is a wealth of experience and IPs that they're now deploying. So, yeah, I mean, I think there's still an advantage, I think, being partnered up with these Taiwanese giants as opposed to kind of going it alone like Bitmain. But I think that advantage will manifest itself more on newer technologies that I had mentioned, and also potentially one day, not now obviously, but one day, using EUV, moving into 5 nanometer, those things. That's when having a partner like MediaTek will really come through.
But what is the shelf life for an S19 Pro? Like the current 7 nanometer chips, are they going to be okay for the next 3 years?
Well, it sort of depends on Bitcoin price, but yeah, I mean, I would say if it stays around these levels, or anywhere from 10 to 20,000. I think all of the miners coming out this year based on this year's 7, should have 2 to 3 years.
So we won't have any 5 nanometer chips until maybe a year before the next halving.
Yeah, I don't see that. But then again, Bitcoin goes to 30,000, 40,000, and everyone's going to be looking for the next big thing, right?
I mean, so then there'll be a gold rush towards 5 nanometer.
Exactly. I mean, then there'll be money to burn again, right? Right now, even Bitmain, they have to be careful how they manage their cash, right?
Yeah.
Which is why, in this space, you can never say never, but just based on everything that's out there, I think it's unlikely.
One of the questions I've always had is that, like you look at the Chinese hardware makers like Hon Hai, Asus, Acer, these guys have like really skinny operating margins, right? Like less than 3%. And I think at one time Bitmain their hardware was earning them like 80% margins or something. So I've always wondered, how come these Taiwanese hardware giants haven't gone into the mining space? Is that because it's no longer retail and they do primarily retail electronics with industrial? Or what's the reason why? Foxconn's been investing in this space through their venture for a long time. So how come none of the big hardware makers have moved into this space?
I think they have. I think they've done it kind of very stealthily. Basically, all of the downstream companies that we've spoken to, they stayed in one form or other from 4 or 5 years back. They haven't made a big, announcement about it because one, I think there's still a stigma attached to doing this, even when it was getting them 70, 80% margins. It wasn't something that they were keen to sort of share, right? I'll just leave it at that. I think they are in that space. They're just not really making it public. And also, to your question of why they haven't.
Because I do know for a fact that one of those names I just mentioned is mining, and they definitely do not want to, they don't talk about it. Yeah. Yeah,
and the other thing is in terms of kind of managing your risk and then your exposure. I mean, this is still a pretty risky, class of clients to deal with, right? So unless you're making these machines to mine yourselves, making building a big sales team to push, these products to institutional miners, that's probably not the best use of their resources, right? And now, with PCs and notebooks coming back in vogue because everyone's stuck at home being sheltered, I'm sure they'd prefer to deploy their resources in these areas. Yeah, something they know that's worked, something that they know that payment terms are going to be honored, whereas they can't always say that, right, with mining customers.
So one of the things about COVID that one of the possible scenarios I think is a ratcheting up of tensions between the U.S. and China, possibly more trade war, more tariffs. Do you think there's an opportunity for Taiwan at all for that? Like, can all of this hardware be manufactured in Taiwan and then exported globally? Is that an opportunity for Taiwan?
Oh, for sure. And this was something that we had looked at, I guess, back in early to mid 2019 when trade war talks were sort of picking up steam, and it's definitely doable. 80% of your bill of materials for a miner is in that ASIC chip, right? And so that's already done in Taiwan. You can do some of the you can elect to do some of the packaging and testing stuff in China, but it's very easy and probably doesn't even save you that much money. So 85% of your cost is already in Taiwan. So you're really just talking about the assembly of the actual system. Previously, there wasn't a lot of capacity, for a Asus, Hon Hai, MicroStar, Gigabyte, these guys in Taiwan to do those sorts of things, right? Their facilities are all in China. But with the trade war, a lot of that capacity has moved back, right? And a lot of it is being automated. So yeah, if you were to completely sort of in-house that supply chain to Taiwan, that's very doable. Now, the only caveat to that would be these machines are, there would still be a learning curve, even for these world-class tech companies to build a miner, right? Because the miners they're not really computers in the sense that they're meant to just do one thing and do it extremely fast and efficiently. They sometimes do it under pretty extreme kind of semi-outdoors kind of weather conditions. Yeah. Right. And so
those old Bitmain mining facilities, they look like chicken farms, right? It's like a corrugated iron kind of building where they open up doors on both sides. And that's what an Asian chicken farm looks like.
So, your ASIC design has to be able to withstand extreme temperature fluctuations, right? Yeah. You have to be able to withstand humidity, and it has to, sometimes you're going to be shipping these miners quite a bit over the course of the year, right? They're going to be in containers. Sometimes you're in Sichuan when electricity is cheaper, and then, in the sort of winter months, you're maybe out in like Xi'an, somewhere, or sometimes you're flying them or shipping them by sea. So there will still be a learning curve, but the Taiwanese companies could definitely do it. If the demand was there and the orders are there, they want to do it, they can do it. I would say right now, though, the best sort of downstream assemblers are actually Chinese. Mm-hmm. They do it the cheapest, they do it the best. They have protocols that ensures, the most stable sort of output for a miner.
That's really interesting. I think also your point about how mobile these machines are, and that the Chinese miners move them all around different provinces in China to strategically take advantage of ambient temperature and seasonal electricity fluctuations. That's a really interesting point.
Yeah, because, and it's a Quanta, a Asus Tech, they're used to building stuff that sits indoors, right? Or goes around with you in a padded briefcase. They're not used to, these extreme sort of weather conditions that you would be exposing the miners to. But again, I think these would be small adjustments that they would have to make, and they could do it very quickly. It hasn't happened because the demand in the market hasn't been there. But if we get a full-on trade war, comes as a result of COVID or Trump being pissed off at China, then yeah, Taiwan could definitely pick up the slack. Sure.
Yeah, and I think it's also a factor of the price too. Like I had another miner in China tell me before that they've got two models, right? That in a bull market on price, you want to sell hardware, and then when price goes down, you want to be mining, and that's kind of how they look at it. So, we haven't been in a full bull market yet, so we haven't seen that huge demand for hardware and selling hardware.
Exactly. Yeah. So I think most of the major mining players have a sizable self-mining business, right? So that's the only way to really survive right now.
Yeah.
Yeah.
All right. Well, I don't want to take up too much of your time here. It's Saturday afternoon, but so maybe we can just do one more quick question. Let's jump forward to the next halving, 2024. What does the mining industry look like at that point, do you think? Is it more decentralized? Has it consolidated? What do you think on that?
I think, based on the trajectory that we've been on the last couple of years, I think it should be more concentrated. If there are no sort of regulatory impact, I think, if you look at the supply chain, you have to assume that TSM will still be the dominant supplier of wafers, of manufacturing. They're not going to support 5 or 6, major mining customers, right? As much as they detest Bitmain and what they did 2 years ago, they're still going to support Bitmain because they're the biggest, right? And they have the most scale. Financially, they're probably in the best position. And then maybe at most we'll support 1 or 2 more. Just from the get-go, you're only going to have 2 at most 3 suppliers that's going to have access to a stable supply, right? So I don't see this industry kind of spreading out. I think it'll be more concentrated. I think by 2024, maybe we're in the next geometry. Maybe we're using the next. I would not be surprised if we were using technology that's being deployed, say, next year, or maybe 2022 as the mainstream, whether that's EUV, 5 nano, whatever thing that's sort of inconceivable to imagine right now. I wouldn't be surprised if that was being deployed, in 2024. But I don't see this space. I see only probably 2 players really in this space by then.
So, that's interesting. So I think that makes sense that you see a hardware consolidation, but I wonder if on the other side, from the actual mining side, if it becomes more diversified, because right now, I don't think we really have any governments mining at scale. And I think possibly by 2024, we will. And I think also you don't have any big, probably, infrastructure funds or traditional investors mining at scale. And I think you will. And you don't have a lot of pick a listed company that's a hardware maker or somebody that could do this, that may be able to do that as well. So I wonder if on the mining side, it could possibly become more diversified, but on the hardware side, perhaps you're right. And it's more, that makes sense. It would be more concentrated. That's
yeah, I think partly it's been this way because, we're still in a bear market, I guess, for Bitcoin price. And really, I'm talking mostly on Bitcoin here. I think the situation may be a little bit different, if you move on to the other smaller cryptocurrencies. But yeah, I think on the mining industry side, there hasn't been a huge influx of major institutional miners. Miners are, to the extent that a financial investor, a hedge fund, a family office, an asset management company have been involved. They've done it through a tie-up with existing miners.
Yeah.
They haven't gone out and sort of started from scratch to do it themselves. A lot of these guys, maybe, I think if they're smart, they would go the mining route. But like Paul Tudor Jones, right? He's doing it through futures. Maybe people are just sort of buying the Bitcoins themselves. Is because and that's really a function of Bitcoin prices still being relatively depressed. Right?
Yeah.
So that the large sort of mining market just hasn't materialized. So when I talk about mining suppliers on the hardware side, I'm really talking about the real major miners themselves, right? These guys are I think much bigger than their customers in terms of mining scale and ability, and that's why I see consolidation, right? Going back to what you were saying about North American miners, a lot of the guys that I was in discussions with a year ago, they're out of business now. More than half have closed down. Right? And that's just because if you don't control the means of that production for your hardware, you're not going to be competitive, right? Like we can make miners at a certain cost, and we mine it ourselves. We just, it's a simple sort of P&L calculation for us. Those guys, if they buy from us, they have to eat the markup, right? That we would put on top. It's just economically, Bitcoin prices hasn't allowed those guys to be able to survive, at the current sort of environment. So again, a lot of this depends on Bitcoin price. But if we stay in the sort of 10 to 13,000 range, which I think a lot of people would be pretty happy if it stays in that range post halving. Some of the more bullish guys are expecting maybe 15,000, but realistically, I think if we're in that 10 to 13,000 range, I don't see a lot of kind of new players popping up for institutional mining. I mean, independently, right? They do it through a JV, through a tie-up with a Bitmain, a Canon, maybe. And I know, everyone is looking for those sort of opportunities, but for somebody to just start from scratch and buy miners, I don't really see that happening.
Maybe one final question. So do you find a difference in attitudes between institutional investors in China and the West? Because I think it's really, really hard right now to get institutional investors to invest in Bitcoin mining. Is it different in China? And I suspect it is different. And then is that a massive advantage for China? Because this is such a capital intensive business. And if you struggle to get access to capital, you really can't, it's a real handicap.
Yeah, for sure. I mean, there's still a stigma for, in this space, especially amongst Western, more traditional investors, right? And I'm sure you guys run into this as well. In China, it's very different. People are much more open to this idea. A lot of wealth was created from nothing, 4, 5, 6 years ago. So they've been through, and then, a lot of that wealth was maybe destroyed and lost, but, it's not unlike a lot of the other industries that's been a huge wealth creation for them. So they're open to all sorts of crazy sort of ideas. And so when you sit down across the table and talk to them, you don't have to go into a whole, I'm legitimate, this is real kind of background introduction. You go straight into the numbers and the economics and what you could do. Because they're a lot more well-versed. More often than not, a potential investor that we come into contact with will pretty much know what mining is about. What are the key factors? What are the major metrics that you would look at? And we go straight into those things. Whereas, for a Western investor, and I haven't met that many in the last 6 months, but previously, there's a whole, what is a Bitcoin? Why does it matter? What's blockchain? Stuff like that, which eats up a lot of that 45-minute to an hour window that you have with them, right?
It's too big of a conversation for 45 minutes. If they haven't done their homework and they haven't got to that point by the time you meet with them, it's really a waste of time.
A lot of them, they just kind of want to meet and see what you guys are doing, and there's very small percentage that they would do anything, but they just want to be sort of up to speed on what's been happening.
Other data points, yeah.
Yeah.
All right, James. Dan, you got anything else?
That's great. That's really insightful. Thank you, James. That's brilliant.
Great. Thanks a lot for your time, James.
No, it's really fun. Just do it again sometimes. Hopefully we'll have some better...
Yes, we should make it a regular kind of update thing. I think that's a great idea.
Yeah, more positive things to discuss next time we get together.
Sounds good.
Only up from here.
Yeah, that's right. That's our motto, no matter where we are in the cycle.
That's my personal motto too. Yeah.
Yeah, I do
Okay.
miss New High. I do miss New High Fridays. When we start to have New High Fridays, then we'll start to have some beers.
Hey, I miss those for sure.
Yeah.
All right, guys. All right. Thanks a lot. Take care.
Talk to you soon.
Man. Take care.